So there's this trade that I just bought from my personal account, my other personal account. Let's see. So I want to buy it here. That is why I came here to see Forex Trading. And I'll just make a quick video to explain why I bought this trade. I will stock it a lot. I can take one. I'm just buying because I've already, see the trade, done the analysis on that trade. So I think this is the demand zone for 4 hours. That is 110. I think one. Give me 50,000. So I'm risking 50k for 110. That is 1:2.1. Give me a buy again. This is swing trade. Give me the second buy again. Where's there? Alright. I think I want to modified. Alright, this is the trade I bought. This is BTC JPY. I'm looking. Why did I take the trade? That is the first question everybody will be talking about. I won't tell you my 2 minute secrets, but I just saw the 4 hours time frame. The 4 hours came. You can see the market structure is just so clear with this. Is my trading style, and I used some few confluence I wanted to add. That is this moving average 200 in my other accounts. I did not use 50 because 50 sometimes 50 is just, let's just getting back to the trade, and so I used 200 moving average 200. Will it show you? Let me see if I can. Moving average 200, right? Yeah. Okay, so what's happened? Let me narrate the story of this trade. This trade is on a downward trend, came here, retested 200 EMA, and it kept on moving downward. It didn't go up, right? It came to this downward area, bounced back, came to the upside, you know, pushed downward, but didn't take this low. So this low now is like the boss. This low here is the boss. No, let me just draw that low. This low is the boss, the heartbeat of the market. Remember, I didn't take it out. So now the market went back to this area, came back to this area. So that means this area now, inside this if we are using the market structure technique, from here to here, the market started consolidating. To get this thing out will be difficult. To get this thing out was difficult. From here to here, the market started consolidating until it took it out. Don't forget to this low is here and this high is here. So this high, until you take this high and this low, the market has not moved. So the market was just consolidating here. So it was not the best decision to enter there. Because we'll call it a consolidating market. Right. Oh God, what did I do? Here's our low now. This is the low here, and this is the high here. The market has not moved from these areas. We'll call it a consolidating market. Until here, the market took out the high and pushed back to this. Now it has taken the high out from here because this is where the high was. This is the high here. Now the market went up because it took out the high. So I pushed my high up here. And where's that low of this high? This is it here. And guess what? Boom, the market went up further again. Now I took out this high, the high that is here. The market made it here. And the new low, oh, I've done a mistake here. Yeah. And the new low came down to here. Now I drew my zone since the trend is now changing like an upward trend. And one bad thing about 4 hours time frame is that you catch the market only once in a week. You barely get 4 hours time frame to trade every time. And 4 hours is my favorite time frame to trade and analyze charts. Though I like using the other smaller time frame. Now we have seen this BTC JPY. If you want to go and buy. All right. So now this is the new high now, and I now use my 200 EMA because this one is just a relaxed trade I wanted to take from my other mobile phone, in my other personal account. So the 200 EMA is just running down from the top like a mountain top, and it's coming to this area. And guess what? Immediately this thing just smashed. It smashed the 200 EMA. Now close above the 200 EMA again. You can see there. That is my 200 EMA, that blue line there. It has been closed above. That is when I saw that confirmation. I was like, man, this trade, let me use 4 hours and take this trade. Don't forget, I added one thing again. I went to my tools. I dragged what is the name of this object? I dragged Fibonacci retracement to down to here. And if you remember the Fibonacci, that set it here, set it in my other thing. This Fibonacci, my settings is just simple. What is my settings? I took away all these chunks. Yeah, I left the one. Yeah, I left the 61.8 and the 50. Now I edited this one. I made it. Was it? Was it 30? 0.3. That should be my 30. And I came here, I made this one 0.7. That should be my 70 Fibonacci retracement tool. That is it, I guess. And then see my settings so you can copy and paste my settings. This video is a live recording, so you can see the video anytime. So I did 0.0, that means my 0.0, 0.770 level, 0.3 30 level, 0.5 50 level, 0.618, which is the favorite for everybody. I used to even do it 0.62, which one is 618? 0.62. It's favorite to everybody, or 0.55. Let me just do it 0.63. Yeah, just give it grace period. That is the favorite to everybody. That is it. Alright. And I used to drag it so that it will go so long. That's right. Right and very left. That would drag this one to make it bold, and that is it. That is all my settings. It is for all time frame, and I will save. This is my favorite energy too. See my Fibonacci tool now. Let me delete it first. Now I want to attach my Fibonacci tool. I'm coming here, just dragging Fibonacci from here to here. You can see we have added a lot of confidence for this trade. This trade must work out. It's a trade that I see that. Let me just use this one and console myself. So why did I put the 30 level and the 70 level? The 30 level and the 70 level just indicate my stop loss. Either Either I drag the Fibonacci from the bottom to the, let me drag this thing from the bottom side to the upside. Let me drag this one here. Then guess what? The 70 level is on the bottom side, right? But if I change it that Fibonacci will be dragged from the top to the bottom. 100 is up, then the 30 level is just my stop loss. All right. So, guess what happened? Let's just do it in a nice way. Since it's uptrend, so we'll drag from the bottom to the top side. So we have dragged from the bottom to the top side. The 100 is on the bottom. 70, you can see the 70 level was rejected. That 70 level now we just tight close it, stop loss. So in that sense, the amount of money I want to even risk self, I want to even risk it again. And now you can see that top level there. So let me just remove this candle, this one. Okay, let me remove this stick. So we have confirmed that this thing is an upward trend, right? We have confirmed that. Now the Fibonacci now played another significant role. We have confirmed our 200 EMA has given us demand level where most of these institutional traders, institutional levels of trading take place. Yeah, if you're afraid of something like that, I don't know if it's true or false, but I used to hear something like that. I don't know if it's true or false. I used to hear something like that. Sorry, I've dragged the free production level. So the confidences of this trade give me 100% guarantee. If you don't have money on your account, go and put money on your account, take this trade. But if you lose, please don't call me. But the confidence, the confidences of this trade gives me more guarantee. So we have dragged the free Fibonacci level and see that 70% was rejected. Now, see that 70% was a bit pierced when it was moving downward. I was like, okay, let's see what is going to happen until the trade now reversed on that 70% level. Let me zoom out a little bit. You can see the 70% level. The trade respected the 70% level. So you can just put your stop loss in the bottom of that 70%. And I think that is fantastic. That is where I've already put the trade has gone beyond 70% level. So Fibonacci has played its role. And guess what? Our golden zone, which is 50%, because they said whenever the trade comes to 50% or 63%, take the trade, right? It has given us that our golden zone. People used to call it the golden zone of Fibonacci. Take the trade and continue the direction of this thing. Now, what should I say again? Now, stop loss is here, 70% of Fibonacci, or if I turn it upside down, I'll use 30% of Fibonacci as my stop loss. And guess what? Guess what? We have put this thing here. I think in my mobile phone, I push it up. If you notice something, notice this other high. This other high now. Let me just drag something here. Can I tap this Fibonacci and bring it down? Yeah, this other high before this high, if you notice something, the market smashed it, like it smashed it and went further up. So there's tendency, and if you notice this other high again, the market smashed it and went further up. Some people want to just put their stop loss on the tip of the up, but me sometimes I'll be like, man, we need to take more this thing here. So that is why what I want to just adjust the stop loss now. I think I think there's chances that we can just push it up a little bit, not too much or not too much. Just make it 1:3. So no need for the Fibonacci again. I've explained everything. Just make it 1:3 restore reward. So that is 50. Then let's go for 150k. Bro, just one trade though. This trade can last for 2 weeks. This is one of the best trades to trade. Like literally the best trade to trade. And it can last for 2 weeks. Go and get funded, guys. Go and get funded. Go and get funded. With $30, you can get a 5k funded account. You can, be doing all these things. So the best trade. This is the best way to trade. Sincerely, you just put one trade and hold it for 2 weeks, and you don't have to be chasing market up and down for 5 minutes time frame. All right, yeah. We are targeting that's 150k. 150k each. Three of them we are looking at 450k. Bro, that is huge. Stop losses, yeah. All the stop losses are here. If you take us out, then fine, no problem. Well, that is the best way to trade. I've explained everything that happened in this market. There's a pullback there, there's a rejection. 200 EMA has been crossed after 200 EMA Fibonacci. Yeah, retracement 2. confirmed this market and said, "Oh boy, you're doing the right thing." uh After Fibonacci confirmed it, 200 EMA confirmed it, then our this thing, what is it called? Our golden zone Fibonacci, okay, Fibonacci golden zone confirmed it, and our 4 hours time frame. This is the best time frame you can ever use to trade, man, because you have no issues whenever you see market doing whatever it's doing. It pulled back, took this to. I would have not taken the trade, but I would have. This one was a nice trade. This was a nice trade. Some people used to catch these trades. Oh my, this trade. Some people used to catch it, but I would have been scared to take it. I would have been scared. Alright, that is by the way. We use other trade which I have. Let me see them. I think I took this trade yesterday. I'm still waiting for them. This trade. The market is closed now, so I think this is for us go up, go down, and this is like Fibonacci did not confirm this thing for me. The 200 EMA cannot display here, so I can't decide. Maybe I'll close this trade by Monday. Fibonacci level. It passed my Fibonacci level, rejected it. I took the trade on the upside. Yeah, I would close the trade at this area, I guess. I'll go for 19k. This is a good trade. Just that the trade is having a lot of, fight and struggles to go to the upside. So, but well, I'll decide if I'll take the trade or I'll continue with the trade or not. This is GBPJPY. Go and buy, go and sell. And if you need help in getting funded, just let me know. I'll recommend you to fund it next. You can just get one of the accounts. 32K, $30, you can get 5k accounts and you can use it and start trading. Have a nice day. So let me just explain what I just saw. Go and try this thing out. Go and trade this trade. Hold it like the way I want to hold. I want to hold like because 4 hours time frame wrong gives you this catch every week. And every week, if you miss it, you will take the upside till the next week again. And the other week, it might pull back. I think for us goes for how many 2 weeks interval. Let me see. This is March. Let me check calendar. Are you kidding me? Is that March 26th? March 8th. Calendar. Okay, this is March 8th, right? March 8th to this is March 15th. Okay, 4 hours time frame is 1 week interval. All right, one distinct interval. Like this retracement for 4 hours would have been fantastic. If that I saw this double top, I would take almost 4 hours is giving us good this thing every week. Just wait for 4 hours to just tell you where it's going to. Every week, every Sunday, just come to 4 hours. Ask 4 hours, how far? What is happening? If you can see here, but this is middle of the week, sure. You can see here it broke its head. Immediately it broke it, take it to the downside, and it pushed up again. 4 hours structure is nice. Alright, thank you for opening my eye. No need to be chasing all this 5 minutes time frame. 5 minute time frame will give you too many. Okay, 5 minute time frame is even doing the same thing. It's telling us that this thing, bro, this thing is upward trend. But if you notice here, 5 minute time frame, maybe that I came here earlier to take it, I would have think that it's downward trend. Especially here, I'll be looking to sell. 5 minute time frame will tell me to sell. 5 minute time frame will tell me to sell. You can see there. I would have sold. Let me see 15 minutes. 15 minutes. This one came down. Downward trend is confirmed because this is the last high. Another this thing double top. Then guess what? This retracement here, I'm looking to sell. So it's good to trade the higher time frame. That retracement there, because if it goes down there, of course, it's uh, hey you guys, I just wanted to show you guys why to this trade. Go and take your own trade.